Hi everyone, welcome to the Timing Research Show for April 3rd, 2016. Today we will be talking about the 132nd weekly report from Timing Research. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports and you can download this or any past report there. We have Matt Buckley back to host again this week, so I'm going to go ahead and turn it over to him.
All right, thanks, David. I appreciate it. All right, welcome aboard, ladies and gentlemen. My name is Matthew Buckley. My call sign's Whiz. I'm going to be the moderator of our panel today. We have a group of 500-pound heads gathered that David gathered today. We have John Thomas, Semper Fi. He's a fellow naval aviator from the MadHedgeFundTrader.com. Lance Ippolito of Alpha Shark. Sam Bourgi of Trading Gods, and Sang Lucci of SangLucci.com. So, gents, let's just go around the room in that order. We'll just keep the same order all day today. John, Lance, Sam, and Sang. And why don't you give us the executive summary of who you are, your trading background, and how you got to where you are now, and where are you now? So we'll kick it off over with John.
Well, if I gave you my trading background, we'd have to spend the entire hour just covering that. Been at it 50 years, run MadHedgeFundTrader.com. I've been running the newsletter business for about 10 years now, and we have an average annualized return of 40% a year for our Trade Alert followers. Is that enough? Want me to keep going?
Hey Matt, it looks like you're muted. You're still muted, Matt.
Here we go. There we go. I got the spinning circle of death for about 30 seconds there, so that's my fault. I think my camera might be eating up the bandwidth, so I'm going to ditch that. All right, so let's move on to Lance. Lance, tell us a little bit about yourself.
I'm Lance Ippolito. I'm a CTA for a commodities fund here in the Tampa, Florida area. I'm also a moderator at alphashark.com. It's me, James Romelli, Andrew Keene. We have Raul Rivera, Tara, and Jeff. We all have different trading styles, from unusual option activity, where we have a proprietary option scanner going throughout the whole day in our live trading room, and then myself and another partner, Raul, we trade futures during the day for our clients and members on the live trading room. Basically just luck trading, anything from index futures to gold, bonds, currencies, and yeah, just pretty much love trading and really do it 24/7. And really happy to be a part of Alpha Shark, where I feel like we have the best live trading room with the best chats, the best crowd out there. So.
Awesome. Okay, Lance. Well, and you said you're over in Tampa?
Tampa, Florida, where it's
awesome.
Super sunny right now and about to enter the rainy season.
Yeah, no kidding. I'm straight across, not straight across, but I'm over in God's waiting room over here in Boca Raton, Florida.
Oh, really?
Yeah. Are you a Lightning fan?
I am. I can't wait to go to some playoff games.
Yeah. This is going to be good. I'm a Panther. Well, I'm a Flyers fan originally since I'm from Philly, but a transplanted Panthers fan. So it's going to be a good cup.
Yeah, I remember that big playoff or that big game. Was it last Saturday? Lightning versus Panthers.
That was good.
Panthers. Yeah, they really beat us down right there.
Going to be a good cup. All right, Sam, tell us a little bit about yourself.
Sure. So from sunny Florida all the way up to Canada, which is where I'm at. So this hockey talk is very interesting to me, and I can go on for about a couple of hours just on the hockey talk. So my name is Sam Bourgi. I'm a markets editor for TradingGods.net. We're actively involved in the VIX market, trading volatility as an asset, and providing new and experienced traders with a new outlet for trading volatility through the various ETFs and ETNs. My background is in economics and in labor market economics. I served as a consultant and economist for several organizations over the past several years, and I entered the trading world as a Forex trader and then eventually began writing articles and reports and stumbled upon VIX, and that's really what the main focus is of TradingGods.net. And I believe it's my 6th or 7th show on timing research, so it's always a pleasure joining everyone, and looking forward to the discussion.
That's great, Sam. Well, we're definitely going to be picking your brain about where vol is right now and where you think it's going. So, yeah, looking forward to that. And Sang, tell us a little bit about yourself.
What's going on, everybody? Sang Lucci is my trading moniker. Real name is Anand. Got started in the prop trading world when it was hot, when you could actually make considerable money just kind of intraday scalping things. When the VIX was high, obviously, too. 2007 when the market crashed. Did pretty well buying up dips from 2009, 2010. Started a couple funds here, and also am in the newsletter business as well as the trading room, focusing a lot on options activity, but aggressive options activity, stuff that can be tradable intraday as well as for swing opportunities too.
Awesome, that's great. And we're going to be we'll be picking everybody's brain today going forward. All right, guys, let's jump into question 1 here, which I think David also has on his screen as well. If you can't see it, scrolling down to question 1. Based on your technical fundamental seat of the pants, your gut, which way do you think we're going to close on Friday? Is that up or down? And you can give us kind of your level of certainty as well with that. And we'll go in that same order, John. Leading with you.
You know, telling you this, I want to take a shower, but I think it's going to be slightly higher on Friday. I think we have one last short squeeze to go. The pain trade is clearly to the upside. Look at last week. We've had oil down 20% from its high last week, and the stock market kept going up. So I think there is one more short squeeze to go. And then after that, we may go sideways for a couple of months, a lot like we did the beginning of last year. So sideways to slightly up, and my confidence level on that is unfortunately high.
Yeah, well, it sounds like you're, you know, we have a saying, you know, you got to trade the market you have, not the market you want. So it sounds like you believe it's going to be going up, but it shouldn't be. Is that what you're feeling, John, or what's your hesitation?
Look at a 2-year chart and tell me how badly you want to buy this market. I mean,
yeah.
We're at the top of a two-year range. The upside, the overhead resistance, absolutely massive. We have 5 previous fails at this level. The market's essentially unchanged in 2 years, or up small single digits. So do you want to buy here, not on pain of death? Do you want to go short here? Well, everyone's gone short so far has had their head handed to them. So we may be entering a prolonged period of no trade, which is the worst possible market to have, and therefore they'll give it to us.
I tend to definitely agree with that. Okay, who was next, John? Oops, or wait a minute. Where's my? There we go. Lance. I'm sorry. Go ahead, Lance. Same question.
A couple facts just to go with that. You know, we saw Friday we had crude oil down and the markets were up. I'm looking to see if the markets can break away from being crude dependent. You know, that correlation we've seen with crude oil in the markets. You know, if the markets can really break away, you know, if we continue to see downside in crude oil, but yet the markets hold up, or should, dare I say, go up, I think that will be a big sign of what's ahead. You know, to go back on the top, I do see a lot of resistance on the S&P mini futures right around 2072 to 2076. You know, we are at the top of that channel, so it's hard. It's very hard to initiate long positions, but I don't feel comfortable being bearish on making downside positions yet. Yeah, I feel like we're still kind of just waiting on market direction, and if going back, as we're waiting, we are missing moves in the market, but there's no real confirmation, whether it be from central banks or or from is good news, bad news, and economic news of where we're heading, of where the market's at. So, I don't want to, go 100% on the long side, but I can't step in front of the train to make a downside short position. So.
Yeah, Janet Yellen just told us no interest rate rises this year. How short do you want to be against that?
Right,
Yeah.
and we saw from 4 rate hikes and now 2 to possibly none. It seems like each time we have a Fed speaker speaking, even if I knew what they were going to say, I wouldn't know how to trade it.
I just did a piece on this last week called the flip-flopping Fed. They've gone from changing their mind to every month to every week to every day.
Correct. Well, and it's interesting. After the commanding officer Janet Yellen comes out and says something, all the lieutenants run out to the microphones over the next couple days and kind of, what Ms. Yellen meant to say was, which is interesting. So you guys are right, and down to the individual Fed lieutenants, they're all kind of swapping their positions week to week. So against that background, I think you're right. You can't fight the Fed, and you got to trade the market that we have. John, I know you're a big oil guy, and Lance was getting into the oil correlation. Has that broken down? Because I remember about a month ago when you and I were talking, it was like a 90% correlation between crude and where the S&P 500 was trading. It was like epic. But where are we now with that correlation?
Well, it has broken down for the past 2 weeks. So the question is this a sustainable breakdown? And the answer is a definite maybe, because I think what's different now is that 26 looks like the rock-solid bottom in oil. Most of the investment industry, in fact, most of the oil industry, doesn't believe we're going to go below 26. And that completely changes the complexion of the equity market. When oil was going to zero, then stocks were trading tick for tick with oil. With oil trading against a definite bottom at 26, no one cares anymore. Now you just have to wait for the smaller oil companies to declare bankruptcy, which will continue for the rest of the year.
Totally agree with that.
Yeah, that's exactly right. And all these oil services companies, I mean, Chesapeake had that bankruptcy scare about, a month and a half ago.
Well, look at Lin Energy, LINE. They're offering a share exchange for people now after taking the stock down from $33 to 33 cents.
Mm-hmm. Good point. Okay, Sam, what do you think as far as the market and where we're going this week? Higher, lower, and what's your probability?
Sure. So I think this week I've learned my lesson. Last week I was on the show and I predicted the market to go a little bit lower because the fundamentals seem to indicate no real upside. And I was a bit apprehensive because I knew Janet Yellen would come to the rescue, and she did last Tuesday. And given that Yellen is scheduled to speak again on Thursday, I don't really see much way of downside. So I expect the S&P to actually tick a little bit higher this week. And I'm actually sharing my screen here. I don't know if everyone sees it, but it's essentially, I'm looking at the VIX volatility market, and I'm looking at how it relates to the S&P 500. So while I do expect the S&P to rise a little bit this week, I don't know how much longer this can be sustained because the VIX closed at 13.10 last week, and it maintains a historical average of around 20, and it's mean reverting. So we do expect volatility to at least creep back into the market at some point. And when that happens, we're going to be seeing a bit of a decline in the S&P. So this chart here really just shows you the inverse relationship between volatility and the S&P 500. It's an inverse relationship about 80% of the time. And when you look at the technical indicators of the VIX, being near oversold levels and not knowing how much longer this decline in volatility can be sustained, I expect the upside to diminish at some point, but not this week. So I would give you a 51% probability that the S&P ends higher this week, because I just think that, as everyone said here, the Fed's position has been, relatively well stated. Yellen's going to be speaking again on Thursday, and that can only mean, one thing, and that's really the signal that I have for this week.
Okay. So what's your buy point? The first day of options flight school, so to speak, you wrote down this sentence that said, "When vol is cheap, you buy it. When it's expensive, you sell it." When does vol just get so cheap for you that it's time to step in, Sam?
Well, it would be around this point right now, because right now vol is at its lowest level since before the Black Monday crash. So clearly, right now, the markets are looking for direction, and there's no clear catalyst right now for any upward any movement. So right now, I'm in a wait and see holding pattern to see what unfolds. Because right now, a volatility of 13.10, that's way past my level of yeah. So that's kind of where I'm at right now.
Yeah, I mean, if we see a 1 and a 2 in front of that decimal point, I think that's stupid. I think people are just going to start looking around like, hey, you want to go get long vol? You want some, let's just kind of sneak over here as nobody's looking and at least load up on it because it's cheap and it's safe. It makes sense. Because to John's point, I don't know if you're looking at a 2-year chart of this thing, it's an escalator, but hey, man, musical chairs, and this music might stop sometime. And Sang, how about you?
All right, guys. So I am going flat. I'm going flat. SPY 206, 207, and my percentage weight on that, I'd probably put about 70 to 80%. John's answer, though, to this question, as far as the future and what the next 3 months could look like, aka miserable trading opportunities, I fear that so much, but I feel it in my bones. You know what I mean? I feel it in my bones, and I agree completely there. Watching the VIX, obviously, and the order flow thus far that I have seen for most large cap names, Apple, Facebook, all these names, including SPY, has been all bullish. So again, I don't think the shoe is going to drop just yet. So I think flat for the rest of the week.
Yeah, if I can make a comment here on volatility, go back and look at the first 6 months on that vol chart for last year. And tell me how often that $13 buy on vol paid off. Answer, never.
Right.
If we're entering a prolonged flat period, vol is going to stay down in the basement for a long time. So I think what's more important on vol right here than price is time. If you get a couple of months of sideways move, say 3 months of sideways move, say in a 12-15 range, that's when you want to buy vol. Because what's happening there is you have a coiling spring. Price action is accumulating, and then the trigger event needed to cause a breakout to the upside becomes smaller and smaller. So finally, Donald Trump will burp, and you'll get a VIX move up to the 20s.
I agree. We need to build that steam.
Long VIX trades last year. That's why I'm mentioning this.
Who was jumping in there? Sam, were you jumping in?
Oh, that was me. I agree. We need to build that steam, and it's going to take time. So in order to get that momentum for that next move that we're all waiting for and that we're all waiting to trade, unfortunately, it's time that's going to do it. Which I hate to say it because I'm looking for those juicy trades every day.
Yeah, they're just not there right now.
Nope.
Correct.
Reach for the trade that's not there, and you get your hand cut off.
Correct. I'm going to go with slightly higher. I'd like to go with unched by the end of the week, but obviously it's physically impossible for us to end the week exactly where we started it. So I'm going to go slightly higher just because you can't fight the Fed and everything we talked about, especially with Janet talking on Thursday. So I think we stay below 2080 for a whole host of reasons. I sent this trade actually out about an hour ago to my subscribers, already up about $400. A weekly options trade saying that the S&P 500 is going to stay below 2080. We're 2069-ish right now, just kind of as we wallow around. So I'm going to say slightly higher with about an 80% confidence level. We never squeeze the trigger on real capital or putting a missile down range unless you have a pretty high confidence of that thing actually hitting something bad or good, in this case, making money. So let's go top to bottom again. John, with you leading off, what are you actually looking at this week as drivers of the market? What are some of the catalysts that are going to drive the market in the direction that you picked?
Well, other than the Yellen speech, there really is no catalyst this week, which is why the market should go sideways to slightly up. We're now in sort of earnings hibernation mode. Alcoa earnings kick off in a couple of weeks. Then we'll start getting reports. People are expecting mediocre earnings at best because of the strong dollar. So we're kind of in a holding pattern. I actually had your trade on. I had a 208, 213 put spread, but 2 weeks out, not 1 week out, and I just covered that for a small loss this morning. because the risk reward is no good. You know, let me ask you, Matt, if you're wrong on this trade and we blow through 208, how wrong can you be? Give me a number.
What do you mean, how wrong can I be? What's that mean?
If that trade doesn't work, if we don't hold at 208, what will the market do?
Oh, I think it goes higher. It rips higher.
Exact rip is the key word there.
Yep.
It goes a lot higher in a hurry, and that kind of short vol trade on the put side, the risk reward isn't good enough for me. That's why I stopped out. You know, you could be 1 point right, but 5 points wrong. And if you're fast enough to get out of that, good luck. Good luck beating the algos. Because they're all programmed to buy on a 208 breakout.
Well, that's also why we put, so whenever I send out my trades, we have two levels in a trade. We have an adjust level where we kind of scratch our chin and go, why is this trade moving against me, and should I adjust it at this point by either rolling it up, rolling it out, or rolling it up and out. And then we have the final point in a trade, which is called the eject level, which is the, you know, I have two engine firelights on, smoke in the cockpit, and my wingman screaming eject at me. That's not the time to scratch your chin and go, I wonder if I can save this. You just go, you get out. So we wouldn't, I don't sit there and take, that's just stupid to take a missile and all the way into impact there.
And the government will buy a new plane anyway.
Give the jet back to the taxpayers. That's exactly what we always said. If you need to get out of the plane, it's already paid for, man. Smoke them if you got them.
That's what insurance is for.
Correct. That's exactly right. All right, Lance, how about you? What's on your calendar for the week that's going to drive the market in the direction that you picked?
To be honest, really, I'm just looking at the price of crude oil. You know, making note, we really don't have too much news out this week. Nothing that's you know, I'm too concerned about. I really just want to see if we have the crude oil continues to break down, maybe it's the low 30s. If this market starts trading, or if the market follows through trading down with crude oil, or if it basically stays flat and maybe ticking a little bit higher and not really caring what crude oil is doing. I really don't feel this week is there's nothing really to move the market. I think it's going to be a really tight range week. It's horrible for a trader because there's not a lot of opportunities, but I'm just not excited about this week, really. I'll just be following crude oil as my main indicator, basically.
If I can mention something on oil, there's a big OPEC, non-OPEC meeting in the middle of April. It was meetings that put in the 26 bottom. It could be another meeting like this that ends this current downturn in oil. So watch the news headlines on that. Of course, we don't expect anything to come out of this. Nobody wants to cut production, but they have figured out that meetings is worth a 50% move in the price. So they're going to keep having meetings until the cows come home, as long as that's the case.
Correct. That's exactly right.
I will also make note, this market, even with weakness in Japan and everything, we're really not even taking this into consideration. You know, we had a wild move in the Japan index, and the market really doesn't even care anymore, I feel like. And that's, you know, overseas, what's happening in other markets, the DAX, China, Japan. I really just feel like all this is a dark cloud, but I don't know when the lightning's going to start striking. You know,
the answer is never. I've been telling my guys to buy every geopolitical dip for the last 5 years. The rest of the world sucks. They all want to send their money here. That's all we need to know about. And by the way, I think that Nikkei dip last week was because Donald Trump told the Japanese to go get their own darn nukes. That went over like a lead balloon, you know, in Japan.
Yeah, it's funny. They don't want our, you know, nuclear carriers or all that stuff in port, but then when you say something like that, they all get rattled and start waking up. So yeah, I thought that was. I think you're right, John. That was right around the time of those comments. So what was it, a year and a half ago, whatever June it was, for a month and a half, we crushed it in one of our portfolios, trading the Greek crisis. To your point, John, it was, hey, yeah, we resolved everything. I'm like, sold, short. No, they didn't. Yay, they're going to get kicked out of the euro. No, they're not. Hey, they voted to stay in. Every week it was great, and it was shooting fish in a barrel, just trading that stupidity because
totally.
you knew.
And by the way, Greece was the best performing stock market in the world for 2 out of the last 6 years.
Well, there you go.
They had 200% moves.
Yeah. Yeah, I think the doom and gloom and the guy on the exit ramp of I-95 speech, it might be valid and it might happen someday, but until that happens, you just got, I call it a hold your nose rally. You just got to hold your nose and we go up here. Sam, what do you think? What's on your flight schedule for the week that you're looking at?
Yeah, so I mean, I mentioned earlier, the Yellen's speech on Thursday is going to be, the main catalyst for, I think, the dovish sentiment is going to be, well maintained. The FOMC minutes, I'm going to be keeping an eye on those on Wednesday, but again, I expect it to be status quo. The oil markets are interesting because, the 50% rally that's happened over the past, 5 or 6 weeks has just been on the expectation that Russia and Saudi Arabia were going to freeze production at January levels. I mean, nothing really has happened out of that. And I just think that, as John mentioned, follow the headlines, because right now there's talk between Saudi Arabia not wanting to freeze production without Iran and what that's going to mean, what that's going to look like. So the meeting in Doha, Qatar, is going to be on the 17th, so I expect there to be quite a few headlines before then. But as everyone said, there's not really a lot of catalysts this week in the market other than a dovish Yellen and perhaps the movement in oil.
Is that meeting actually going to happen? It's so funny. I've seen reports of, well, Iran's definitely not going. They said, we just got to this party and we're going to keep pumping, so you guys can suck it, and a couple other countries as well. But yeah, I think that meeting is going to be critical. John, you're our oil guy. What do you think about this meeting in Qatar?
Talk is cheap. There's no way that Iran can agree to any freeze because their production is essentially at the 1980 level. So that they're not going to agree to a 40-year-old production level, the year that they finally get to rejoin the economy and reinvest in their oil infrastructure. So, longer term, I see a lot more oil everywhere. The U.S. fracking wells are cutting their break-even costs from 60 down to 40. There's over 1,000 duct wells that can come on stream literally in a day as soon as we get oil over 50. They're all just waiting there. So massive production caps for oil above 50, I'd say. We could end up trading in a 26.50 range for years.
Mm-hmm. That's and I don't think the industry's necessarily rigged for that. I mean, Schlumberger, Halliburton, all these guys are laying off 10, 15,000 people at a time. Midland, Texas is imploding. Nebraska, it's starting to impact the economy of all these places. It's a shame.
Well, they're all showing up in California. They're coming out to get jobs at that Tesla factory.
Exactly.
I have a practice. Whenever I go into Denny's, I ask the waitress where they're from. And you always get a great answer. If she's from North Dakota, it means the industry there just collapsed. But, years ago, they were all from Detroit. During the crash, they were all from New York. Every crisis generates another wave of immigration into San Francisco.
Oh, that's funny. That place never seems to go bust. Okay, Sang, how about you? What are you looking at? What's on your flight schedule for this week?
So, I mean, as much as everyone is kind of drab on the prospects as far as trading opportunities for the week, there's always something. There is always something, and with this bullish kind of sentiment and this kind of melt-up activity, you get the rotation, and the rotation can be really sweet sometimes. Past couple of days, pharma names have been incredible. The boys and I all caught this IBB, Gilead, Amgen, for several points. Today it was Tesla after the gap up here. Nice move back up over 250. We're seeing a lot of options activity for Twitter now, which is again a dead dog. You get some kind of rotation into these dead names, and that provides actually a lot of opportunity especially in the option space. So despite the fact that we have this kind of lull environment, options activity can really show you some nice moves in whatever they're rotating to next.
Mm-hmm.
Going, sorry.
Anand, are you looking at unusual options activity, or how, when you
No,
rattle off some
it's
of those
usually
names, what you're looking at?
never the unusual options activity. It's more on how these orders are executed in the option space. So identifying aggressive buyers in the option space. So for example, they call them intermarket sweep orders, right? It's where they basically say somebody's quoting 80 by 90, for example, and you have 10 exchanges quoting offers at 90. Somebody comes in and sends what we call an ISO order and sweeps the whole book at 90 cents. You know, to me, very aggressive kind of action in that particular option. Pull up the stock, see what's going on, see if there's solid action on the tape across the board, and make a play.
Was somebody, Lance, were you trying to jump in on that?
Yeah, so going back to the option activity, so at AlphaShark, we have a proprietary option scanner where we filter for unusual option activity, and also we'll see, we filter basically because we want to see sweeps, we want to see opening positions, volume higher than open interest, and just to make note on sectors that have been outperforming, we noticed in the IBB, the biotech ETF, and in the XBI, the Spider biotech ETF, we saw massive call buying in the April options on both the IBB and XBI, and these names, these ETFs just in general have been really hot lately. You know, we're seeing 2 to 3% moves in these ETFs. So yeah, there still is opportunity via the options world, I feel like, for trading. And then today, making note with the Twitter comment, you know, we kind of saw that sector rotation out of Facebook and into Twitter. So I definitely found that interesting this morning and then last week with biotech names. And, you know, it looks to be, just from the option activity combined technicals, that biotech seems to be breaking out right here. And
monster moves. So they're still available, even though you get this lull market. You get that lovely rotation in the options world. It can show you a nice place to be, even though in general you kind of want to sit on hands.
Right, and I will make comment too. What we've been looking at, even though the Dow and the S&P are at the top of the channel, the Nasdaq does still have some room to run. I'm looking at 4,600 of the NQ futures, and a big part of that, you know, biotech could be propping up that Nasdaq. If biotech runs up, the Nasdaq will follow. So I'm definitely taking a look. You know, if I am trading and I have to put on trades, I'm really looking at the Nasdaq with biotech and these big momentum names. You know, we have earnings upcoming, Facebook at the end of the month, to see if these names really start rallying Google into earnings, and that could be a leg for the market to head up.
Yeah, I would totally go with that. The only way to beat a flat market is with stock selection. Last year we nailed the first half of the year with cybersecurity and big pharma. This year, biotech and pharma are absolutely ripe for a big rotational play because they're cheap. They've just had these enormous 30–40% sell-offs, and the earnings picture is still there. You know, earnings keep growing at these companies. It's only fear of politics that has driven these things down. And guess what? Eventually elections go away, and I expect these things to rally massively into the election. So that probably would be a big pick. Also, banks are also ripe for a big rally. Sooner we get closer to the next Fed rate hike, you can expect those things to start moving. You know, there's a reason why Warren Buffett increased his share in Wells Fargo to 10%. You know, he's playing for the long view. It's just a matter of time before the market figures that out. So yeah, those, you know, look at the best high-quality earnings-growing sectors that have been beaten up the most. That's where you want to go into now.
Mm-hmm. Like that. So that's a good segue, John, into question number 4. Since you mentioned financial stocks there, speaking of financial stocks, when do you believe that the Fed is next going to raise interest rates?
December. You know, it's that simple. The economy's not strong enough for her to raise in April or in June. They're not going to want to mess with the election. Earliest opportunity is December, unless we get some massive surge in economic growth in the next couple of months, and we're just not seeing that in the numbers anywhere. So better look for December.
I'd agree with that. As we all probably would agree, I don't think she's going to raise interest rates in a non-press conference Fed meeting, because they do have Fed meetings that are in between the months that you just mentioned. And I think December's also right because they want to at least keep some credibility and sneak one in and at least be able to say, hey, we got another one in before the calendar turned. And definitely agree with the election comment. The Fed says that they're non-political, which is a bunch of crap. What was it, 2 weeks ago? There's 85% of the Fed governors or Fed people were, contributed to Democrats or whatever it is. It's like, okay, and Janet sat up there with a straight face and tried to say that they're non-political. So I agree with you, John, that they're not going to do it until December. Lance, how about you?
Just to make a comment, I like how you mentioned sneak it in there in December. The transparency that they have to sneak it in. I would have to tend to agree. If they do raise interest rates this year, I think it will be, to steal your term, sneaky. I think it will be a sneaky, quiet move in December where hopefully they won't get a lot of publicity and they just try to basically maintain their credibility. I can't see them saying out of nowhere in the next upcoming months, hey, we're going to raise interest rates, everything's great, because there's too much uncertainty, and unless, if the market stays in this range, near the top of this channel, maybe it grinds higher to sideways, I think the Fed's just going to be complacent and just wait for an opportunity, possibly in December, to say, okay, we're going to, raise a small amount, but prior to that, I just think there's too much uncertainty for the Fed to do anything.
Yeah, let me tell you the key to understanding Janet Yellen. I've known her about 20 years. She was my economics professor at Berkeley. Always err on the side of dovishness. Always err on the side of making jobs the priority. Remember, she was president of the San Francisco Fed, not the Dallas Fed, not the St. Louis Fed. It's all about jobs. And even if inflation were 10%, she wouldn't be concerned about inflation. It's all about. It's going to be all about jobs.
AKA stay bullish.
Exactly.
Yeah.
Sam, what do you think?
Yeah, I mean, I agree with everything that was said. December seems to be the more likely time for them to raise rates. I mean, we talked about maintaining their credibility. I mean, what credibility is left? You have. In March, they come out in there with their dovish statement. The following week, you get Lacker, you get Lockhart, and you get Bullard, who are all talking about, we could raise rates as early as April. And then Yellen last week, completely reverses the tide on that one. And it's like, well, it's like, are you trying to deceive the market? Is that what your goal is, or I mean, what's the underlying goal here? So, I mean, the only real number that I'm looking at is the PCE inflation rate, the core PCE. I believe it's at 1.7, which is closer to the target. Other than that, growth seems pretty moribund right now. We're looking at GDP growth of less than 1% in the first quarter, based on estimates. So, if you look at the previous FOMC statement, there was more emphasis made on the international developments. So I think that's going to be the next scapegoat to keeping rates low for a while longer. Well, look at what's happening internationally. There's volatility. We can't raise rates. And as John mentioned, err on the side of caution. I only expect one rate increase this year.
Sounds like we have a bunch of smart guys here today.
Well, let's see. Anand, how about you?
Yeah, I mean, I'm gonna go with the flow here. I think they kind of put off raising rates until the end of this year. I would say one point that would be different is to disagree with our man John over here about the dip buy on the banks and the Buffett buy at Wells Fargo. I do think he's in best of breed. Santander, was just warning on their earnings as well. And as I look at Bank of America and a lot of these things trade on a daily basis. Citigroup as well. I think we're coming towards a massive change in the banking industry. I don't think it's going to happen, obviously, in the short term. But I think over the next 5 to 10 years, the way the millennials want to do things and the way that these guys access their capital, everything going digital, I think there is going to be a massive change in the banking industry, and you're going to see Bank of America back to $5, and you're going to see, you're going to see a lot of interesting headlines in the banking sector.
All right, that'll be a good segue to our kind of final question there, because I like the banking sector. But John, let's go top to bottom and tell us a good trade or that you have on right now, or you're looking at, or give us one of your juicy hidden gems that you're looking at right now.
Well, my trade for last week was Tesla, so that kind of late on that one. My letter a week ago was Tesla takes over the world on Thursday, and nobody believed me. I'm sorry, but I don't have a trade of the week. Flat sounds like...
Not necessarily for just the week, but just like in general.
Yeah, flat sounds like the best thing. Yeah, if we get any kind of dip in the pharmas and the biotechs, that would be my first shot. And I go for Gilead Sciences, Celgene, one of those guys, because these people, what they're doing here in the Bay Area is miraculous. All diseases will be cured within 10 years, sort of thing. So this is going to be a permanent bull market for that whole sector. And I want to play from the long side. And the election has given us a great entry point.
Mm-hmm. Now, do you play, whether it's biotech or the tech out there in the Bay Area, are you an ETF guy, or are you a single stock guy, or a little bit of both?
We with every trade alert, we send out a range of choices. We give them single stock, ETF, options, and then outright calls or call spreads on in the case of the biotech. So when we give different instruments so people with different risk levels can take advantage of each trade alert.
Oh, that's great. So it's kind of primary, intermediate, advanced type of slotting.
Flavor. Also has to do with your level of sophistication. A lot of people only like buying stocks or ETFs. Other people, they only want to hear about, call spreads, put spreads. So.
Okay. Lance, how about you, man? What are you looking at right now, or what looks good to you? What would be a nice trade for the folks listening today?
I trade mostly futures, but I do analysis on big individual stocks, a lot of these momentum names. As we saw. The other week we saw Amazon break out of 580 to the upside, Facebook with a beautiful run to 117. It went out Netflix broke to the upside. So I followed all those to trade the NASDAQ futures. As an individual stock, what I'm looking at, making just note of the banks, I was doing an analysis this morning on Goldman Sachs, and we're starting to approach that 160 in Goldman Sachs. So I'll be looking for, if we could get some volume increase, maybe a volume spike, we hold above 160 on the daily candle. I think Goldman has some room to run, possibly that 166, 165 level. And then for futures, this yen, the yen rising has definitely been a concern to me. I really like where the yen is trading right here for further upside, and that should mean equities go down, but it seems that relationship has been a little unorthodox lately. For the future side, any pop in crude oil, possibly above 38 to 40, I'm going to look to initiate bearish positions via buying bear put spreads or just shorting crude oil futures in general. I was short crude last week and made some nice gains, but really any pop in crude oil, I don't think that sustains, and I'll be looking to initiate short positions in crude oil.
Awesome. That all sounds good. Sam?
Yeah, I mean exactly what Lance said on the crude oil there. Because I mean, as an economist, I tend to look at the market fundamentals. I mean, the latest rally in oil wasn't supported in any way by the market fundamentals and what the actual supply-demand balance is. We're still short. We're still overproducing by about 2 million barrels a day. So I think that any kind of pop in oil in the short run will provide good shorting opportunities. I'm also looking at, I mean, in general, emerging markets. We're seeing a slowdown in China, of course, but India seems to offer a lot of promise. So currently exploring different individual equities there, but overall, if you're looking for emerging market hotspots, India seems to be the new black. So I'm definitely keeping my eye on that. But ultimately, I don't really have any imminent upsides at the moment, but other than the pop in oil prices.
Yeah, India is the no-brainer along in the hedge fund community. It's the next China.
Mm-hmm. Absolutely.
And Anand?
Well, I think first let me say with Sam's point as well as John, I am Indian and I do appreciate the fact that you guys are saying it is the new black because let's face it, in this country, in America, it wasn't cool. It wasn't that cool. All we had to go on was Apu and Homer Simpson for a while. And now finally things are coming around for us, man. Things are coming around for us. So I do appreciate that. I will say for the week, for me, some of the ranges are pretty damn good. Some of these ranges, SPY ranges, and for the high betas are very good. So I like writing. I like writing during times where, you know, we get this kind of flattened market. So if I can go far out of the money and start shaving premium all over the place, assuming we're not going to get some of these big informed moves, I love just writing credit spreads during times like this and kind of sitting back and letting them work. So that's a great trade, you know, for those that like, you know, that kind of slower trade, one that you don't have to sit there and aggressively watch every single tick if you're playing the options market. One thing that I am looking for, though, is some of these travel names. So if you take a look at Priceline, Expedia, and TripAdvisor, Priceline has this giant earnings gap, best of breed, no doubt. Meanwhile, I'm short Expedia currently long term. If Priceline starts getting under 1270, 1260, I would love to short the living piss out of this thing. But we'll see. It's very difficult to do this, obviously, in a very bullish market. So we'll see.
That price line is quite the name. Every time I seem to look at it, I just shake my head at that chart.
It's crazy. They got price targets for 1,500, 1,600 on this damn thing. Yeah. So it's out of control. But if you catch it right, oh baby, oh baby.
By the way, the reason we like India is because there's nothing else to buy. You're fine as long as you don't drink the water there.
Oh, John, don't don't throw me under the bus back again. Don't throw me back under the bus, baby.
I spent 2 months in a hospital in New Delhi once.
Well, that's because your body's not used to it, man. You know, that's that brown skin, baby.
Yeah, I can tell.
Well, he's a Marine. He's got to be pretty tough to knock him down for 2 months.
Sure.
Okay, for me, like I said earlier, actually, this trade was up $300 last time we looked at it. Now it's nearly $500. I'm going to leg into an iron condor on the S&P 500 because, as I think John and most of all you guys mostly said, we're probably going to wallow around here on the S&P 500, waiting for some direction, or at least waiting for Janet on Thursday. So I'm probably going to put on a bull put spread and send this out to my subscribers once we get off the air here. So that's my trade for the week is a little bearish on the S&P 500 to unch. I don't think we have any rip your face off rally this week. Volume's starting to dry up as well, and not just we're really not seeing that institutional buy-in that we have been of late once we busted through that 200-day moving average. So hopefully collecting about $2,000 by the end of the week with a 69% probability of doing that. So that is me, and that's my trade of the week. All right, guys, let's go around the room and wrap it up. John, how do we find out about what you do, and where can we get more of your beautiful brain and your services?
Go to madhedgefundtrader.com. Also, next week I start my spring U.S. roadshow, visiting 7 cities, Houston, Miami, Atlanta, Washington, D.C., Boston, New York, and Chicago. You want to buy tickets to the strategy luncheons, have me look at your portfolio, see if I'm a real person. go to madhedgefundtrader.com and go to Strategy Luncheons USA and then pick your city.
That's great, John. Give me a call when you're down here in the MIA, man. I'll buy the first round or 10.
I'm on April 18th.
April 18th. All right, I'm writing that down. Yeah, let's do it. April 18th. Okay, Lance.
This week at alphashark.com, we actually have an open house where you don't have to be a member. You can actually join for free this week, the open house, and you can actually be in our live trading room. When the market's open, seeing how myself and a few other moderators trade throughout the day via screen sharing. So if you want, feel free to go to alphashark.com. You could be part of the live trading room this week, and you can always follow me on Twitter, Lance Ippolito. I just joined Twitter, and I've had a couple of tweets already trying to learn that out. But
Hey.
but yeah, so Twitter, Lance Ippolito, and then alphashark.com. If you basically want to see how we trade throughout the day, it's a free open house to where anyone can join.
That's great. I think you and who is it, Jonathan Tays, the captain of the Blackhawks, are the last two men on the face of the earth not on Twitter. So welcome to the world of Twitter.
I'm still learning the hashtag and money sign and everything. I was talking to like a social media manager, and they were trying to show me how to do it, and I still have no clue.
It's a different world. You'll be in a day and a half. You'll be a Jedi Master. That's how quick the learning curve is. Okay, good. Sam.
Sure. So, TradingGods.net, we're currently offering a sale on our VIX Trader. It's a 40% off sale on it's a complete educational program designed to help new traders access and trade different VIX ETFs. So, anybody interested in that can visit TradingGods.net to learn more about it. And I'm also actively involved in weekly webinars on Trading Gods. So, anybody interested in the VIX market, please log on, and we'll be happy to hear from you.
Awesome. And Anand.
All right, guys, if you want to find me, saying Lucci everything, as you can see right behind me, just go ahead and type in saying Lucci on any social media platform, and you will go ahead and find me. Also look for Wall Street Jesus as well. That's Wall ST Jesus, and we have a trading room right now that is focused on trading options order flow, whether you're a futures trader, options trader, equities trader. We are looking for aggressive options activity that will yield to tradable moves for specific types of strategies and for a good scope of strategies as well. And constantly we're trying to improve our technology in there, how we can get a more refined activity that will yield to more profitable scalps during the day, as well as swings too. So check us out, Sang Lucci and Wall Street Jesus.
Awesome, Anand. Thanks. And folks, you can go to topgunoptions.com, find out more about what we do here at TGO, or if you want to give us a test flight, you can go to topgunoptions.com/intermediate-flight, and you can go into our live trading rooms, our alert service, and get a copy of a couple of our manuals as well, the options pocket checklist, the primary workbook, and the intermediate workbook, and it's $28 for 14 days, so that's not too bad. Or you can shoot us an email, support@topgunoptions.com, or give us a call, 754-300-1084, if you have any questions and are interested in more of our services. So, awesome. All right. Thanks again, guys, for today. I got a couple notes down. John and I are going to have a beer on April 18th. And David, I'll throw it back to you, my friend. Thanks for having all of us. Looks like we got some good stuff today.
Yeah, thanks, guys. Great show. I just want to remind everyone watching, you can go to TimingResearch.com to download this or any past report there. Also, go to TimingResearch.com/current survey every weekend to fill out the future surveys and have your IDs be part of the report each week. And we have a great show planned for next week as well. Henry Schwartz is going to be on for the first time. Also, Larry Gaines, Ed Carlson, James Romelli, and Matt will be back as host. And just want to thank all my guests again for this week. John Thomas, madhedgefundtrader.com, Lance Ippolito of alphashark.com, Sam Bourgi of tradinggods.net, Sang Lucci of sanglucci.com, and of course Matt Buckley of Top Gun Options. Thanks, guys.
Thanks a lot.
Thanks, David.
Thank you.
We'll see you.